Hello everyone, welcome to the Ichimoku.co and Forex Trading TV daily FX market review for the trading day ending Wednesday, January 14th. Firstly to the Euro US dollar, and here we see the spinning top type candle that's formed for the close of today's trading. It denotes indecision in the market, and for the past 4 of the past 5 consecutive trading days we've seen the market finding support at the 117.50 level. Now, any rally that we saw in this market today saw resistance coming in up towards this 118.75 previous level, and we have an indecisive spinning top type candle that's been formed here whilst the market is technically in a downtrend in the first time frame, forming a lower high and a lower low, and it suggests that there is a possibility of the market trading to higher levels. Now, not a lot of confidence in the market trading through this 118.75 level, with the Tenkan-sen trading very close to that area, and it's likely that the market may find some resistance and strong resistance at the Tenkan-sen indicator. By the same token, any sell-off may once again find support at the 117.50 level. So a market that's really has no clear direction in that fast-term time frame, although we are trading down below the Tenkan-sen, so we still do technically have a bearish market in that short-term time frame. And over the past 5 trading days we've seen the market basically moving sideways, bound between that resistance overhead and that strong support below, and in line with the market being bearish in that longer term time frame and the medium term time frame. By trading below the Kijun-sen and the Tenkan-sen, we're likely to see the next move to the downside. Although we can't prejudge the market, we don't know that we actually will break out to the downside, considering that we've had such strong support down there as well. But we can't preempt the market. What we have to do is react to the market if it does break out to the downside below the 117.50 and close below there. What we'd like to see is a strong bearish close down below 117.50, and if we see that, we could see the market testing down to the next level around the 116 area. Just looking at the Fibonacci Extension, here we're seeing the first time frame downtrend find some support below the 23.6% level. For the previous day's trading we tested 2 there. There was some backing off from that area, some small amount of price rejection. Today a larger amount of price rejection from below there, with the sellers unable to close down below that 23.6% level, and it suggests that there is potential for a change of trend to the upside. In terms of the bands, today we've seen the market test up to the upper band and be rejected from there, so that band is continuing to hold as resistance for the Euro US dollar, and may continue to do so into the future. So with this current candle that's developing, if we do see the trend attempt to change the upside, we will be watching the lower band at 118.36 to hold as resistance. We still do have the market trading down outside of the lower band, suggesting that we still have a strong negative bias in this market. Moving next to the US dollar Japanese yen, and here we see continuation of the trend to the downside, with the current candle making a lower high and a lower low. And if we look at the extent of the range for the current day's trading as it's finished, the low is well below the previous low of that previous candle, and suggesting that the sellers have shown some eagerness throughout the trading day to test down to these lower levels. The problem here for the sellers, however, is this large shadow on the bottom of the candle, and it suggests that the sellers lost commitment down around this 116 area and within the Ichimoku cloud, getting very close to that 115.76 region, this previous swing low in an area that's held as support and resistance in the past. The sellers have failed to control the market for this candle. The buyers have actually taken control by closing between the midpoint level and the high, and it suggests potential for the buyers to come back into this market. And as we watch this new candle trade, we are seeing some buying coming in from the open. Now, the buyers may find some strong resistance at the 117.94 level, which has been an important area of support in the recent past. So that will be a very, very important level moving forward, as will the area above there at the Kijun-sen, the Tenkan-sen, and the Ichimoku cloud, which extend through to the 118.19 level, 118.27, and up to about the 118.74 region at the top of the cloud. So the buyers are going to have to be very strong if they are going to change this trend to the upside. Now, having said that, however, the colour of the body of this candle is still black, so it means that there is still some hope for the sellers here, that there is still some downside momentum in net terms, but not significantly so. If we look at the some of these candles in the recent past, there has been some strong net momentum, and we haven't seen that in this downtrend as it's developed for the past 3 trading days, and it does suggest that even though the trend is continuing down, the sellers probably aren't as strong as we'd like them to be. But by the same token, we've seen no strength from the buyers at the moment yet, except for today's close with the buyers taking control of the market. Now, just looking at the Fibonacci extension of that previous 1 or 2 candle uptrend that was in place prior to this new and significant downtrend, we are seeing the market interacting below the 161.8% level, being rejected from below there with the buyers taking control, and that suggests that there is a possibility of a change of trend to the upside, although, as I've mentioned, we do need to watch that resistance overhead. Sorry, that wasn't the Fibonacci projection tool, it was actually the Fibonacci retracement tool. So we're examining the relationship of this current first time frame downtrend to the immediate previous first time frame uptrend. But now examining the Fibonacci projection tool here, and we're examining the relationship of the current first time frame downtrend to the previous first time frame downtrend, and here we're seeing the market testing below the 100% level, being rejected from below there, and the market failing to close beyond there with the buyers taking control, and it does suggest a possibility of a change of trend as well. Now, just looking at the bands with the US dollar, Japanese yen, and here we see the market continuing to trade down outside of the lower band, but we're not seeing any solid bearishness here. So I don't have a lot of faith in this move developing strongly yet. What I'd like to see is the sellers coming into the market strongly, and for the past couple of days we've had the day prior to today we had indecisiveness, the market finding resistance at the lower band. Today the sellers losing control, and it does suggest that the market has a good possibility of rallying. And if we do see the market attempt to rally on the bands, we have strong resistance at the lower band at 118.40. Moving next to the US dollar Swiss franc, and here we see a continuation of the trend with the current candle making a higher high and a higher low, but it has done that on an indecisive spinning top type candle, which suggests indecision, and we've seen a lack of follow through following that fairly strong bullish candle from the prior day's trading, a large white body candle, buyers closing control, but unable to breach the area around the 109.50 level, an area that has held as strong resistance for the past 4 of 5 candles, and this indecisive candle does suggest that there is a possibility of the trend changing to the downside. So we will watch the low of this current candle at 101.35 for a possible change of trend. Now, if we do see that trend change, then we're likely to find some strong support coming in at the Tenkan-sen trading at 101.24, and any retracement back to that level is likely to be temporary, and that's on the basis of the market being bullish in all 3 timeframes by trading above the Ichimoku cloud, the Kijun-sen, and the Tenkan-sen. Now, one issue to watch here is that the market is looking just a little overextended in the depth away from the Ichimoku cloud. Not overly so, but it wouldn't surprise to see the market come off to a degree and attempt to find some sort of equilibrium in that longer term time frame. So if the sellers are strong enough to breach the Tenkan-sen, we could see strong support coming in around the 100.09 area, basically around that 1 round number. Now, just looking at the bands with the US dollar Swiss franc, and we're maintaining price action up above that upper band, suggesting a fairly strong bullish bias in this market in the medium term time frame. Today's candle tested down very close to that upper band, and we saw price rejection from there. So it does suggest that we should be watching that upper band for today's trading to continue to hold as support, and it currently trades at 101.45. Moving next to the Aussie dollar, US dollar, and the second last candle on the chart here is the one that we should be analysing. That's the one that has completed trading. The final candle is still trading at the moment, but may be quite significant. In that candle that has finished trading, we have seen a continuation of the trend to the downside, market making a lower high and a lower low, but we've seen the market testing down through the Tenkan-sen, but failing to close down below there, with price action being rejected from below there, and strongly rejected recovered from the previous strong support level in the recent past around the 80.65 region. For the fourth consecutive trading day, we've seen the market close between the Kijun-sen and the Tengen-sen, and it represents a lack of direction in this market in that fast to medium term time frame, and it does suggest that we could have a market that's transitioning from that downtrending phase in that medium term time frame to an uptrending phase. But what we'd like to see is the market close up above the Kijun-sen indicator to give us a bullish market in that medium term time frame. We do have a bearish market in that longer term time frame, so that will be the overriding factor in this market, giving us the overall direction. And if we see the market sell off and breach the 80.65 level, we certainly could see the Aussie dollar trading to lower levels, but we're not trading anywhere near there. And when we did, or for this current candle, but when we did for today's trading, we've seen very strong price rejection from that area with the buyers taking control. So it does suggest that the market may be setting up for a test to higher levels. Now, in this current candle, we are seeing resistance coming in at the Kijun-sen and at the 82.15 level, and some price rejection there at the moment. So that is going to be a good test for the buyers, 82.15. If we see the market close up above that 82.15 region, we could quickly see the Aussie dollar testing up to the 83.14 area. Now, we also have potential for an inverse head and shoulders pattern to form. Here we have the prior downtrend, a left shoulder, something of a head, a complex head, and a right shoulder that may be forming if we do see this trend change to the upside here in the first time frame, and we will be able to draw a neckline. Now, the problem with any potential target from this, if it does happen and we do breach the neckline, will be the resistance from the Ichimoku cloud, and the neckline, depending on where it ends, may not be realistic. I haven't done the calculations yet because we don't look anywhere to be trading anywhere near the neckline at the moment. Now, just taking a quick look at the Aussie dollar with the bands, and here we see the band squeezing up, which is what we like to see as a trader. It suggests that the next move is going to be a trending move, and could be a fairly strong trending move, and we're looking for the breakout. And with the bands, we're looking for a breakout in either direction, either in a bullish manner or a bearish manner, and then the strong follow through. So what we saw for today's trading has completed was the upper band once again holding as resistance for this market for the third consecutive trading day. The market unable to close up above that upper band, but there is an opportunity here on this current candle as it's developing, and we are trading up above that upper band. So if we close in a bullish manner up above there, and then we see another strong bullish candle with follow through, and I suggest we'd probably like to beat this the swing high at this candle at 82.54. If we do that, we could see the Aussie dollar begin a new uptrending move and potentially test to higher levels, to the swing highs around this candle, or even potentially up to the 85 level. Just having a look at the bands on some of the other charts here, and the Euro Aussie, we're seeing the market trading down below the lower band, suggesting a strong negative bias. We've seen the market test up to within and just through the lower band today and be strongly rejected from there, and suggesting that that's an area we should be watching for resistance at 145.36 for this candle that's currently developing. Also, the Canadian dollar. Here we see the market trading higher above the upper bands, some indecision coming into the market at the moment. We're still trading above the upper band. It means that in the bigger picture terms we do have an uptrend in place. Any retracement that we may see here should find support at the upper band at 118.83. The Aussie dollar Japanese yen, which we looked at quickly yesterday, we had a squeeze going on, a breakout down below the lower band. We didn't see the bearish breakout. We saw indecision and a candle where the buyers took control, and now we're seeing the market rally on this current candle that is developing to within the bands. Now, we should be watching very closely for resistance at this lower band or within the area in a move up to this 97.11 region, and that lower band there at 96.39 as an area of resistance.